First half numbers showing sales up 8.1%. How difficult was it to grow sales during this half?
That's a good question, Godfrey. It's tough. This market is tough, and particularly for the customers who Woolies serves. So we serve predominantly LSM 9 and 10, and those are some of the customers that have been the most hit in this economic structural shift, because it really has been a shift. Most of our customers have seen their house prices drop, they've seen their costs of borrowings go up, they've seen fuel costs go up, and they feel, I think, more strongly the uncertainty both politically and economically into the future. What we do feel is this is an unbelievably resilient customer and will settle down and understand the new world and then go forward. But the last 6 months has been tough for those customers.
It looks like particularly tough on the clothing side, because I see a slight decline there, 0.6%, whereas on the food side, that increased 9.5%. Now, is that a function of greater space and greater spend, or perhaps you did something else?
We have added footage in food, and will continue to add footage. We open on average between 20 and 30 new stores a year, and although we're going to slow that down into the future, it's still going to be well over 15 new stores a year for food. So we think there's a lot more scope to grow in this economy, despite the fact that the market is tough and will stay tough.
And on the clothing side?
On the clothing side, what has happened is that people, certainly our customer base, are much more focused on buying things they need.
Right.
So there's less into, well, I'd love to have that, and a lot more about, I need a decent jacket, I need a good pair of jeans, I need some quality that I can trust, I need good value for money, and they're going to come to Woolies for those quality items, but particularly in what we call the building blocks of their wardrobe.
Everybody, I'd imagine, would have been watching your margins, because there's been a lot of talk in the market that you must be losing market share in this tough, difficult environment, particularly for the customers that you serve. And yet we saw the margins coming in flat. How did that go?
We've done good work on controlling the costs within the business. So an exercise that started 18 months ago to say how are we going to stabilize costs, how are we going to take non-necessary costs out of the business, and I think the teams have done an excellent job on that. So cost control has been the mechanism whereby we've held margin in a very difficult sales market.
Yes, and I also see at the same time that you are adding in other ranges on the food side. Has that helped you maintain market share?
One of the key things that we think our customers love about Woolies is the innovation that we put onto our stores all the time. So we've just launched a whole range of natural cleaning products, which has been extremely well received. Completely natural, looks beautiful, works well, and this is the sort of thing that Woolies likes. We've got a cooking range, we've had a new range of prepared dishes, and people love coming into Woolies to see this newness, and we don't think that's ever going to change.
Going into your results, there was a lot of talk around pricing, with Pick n Pay calling its suppliers for a meeting that was well publicized. Issues around there being that retailers have generally kept up prices, while the reasons the prices went up in the first place haven't remained. In fact, oil has come down, which was one of the major reasons. But we have not seen huge price cuts on your part. How has that been achieved?
We've worked, Godfrey, for the last 18 months as well on our pricing architecture. And on the core products, on the basic things like rice, potatoes, milk, Woolies is absolutely competitive with the marketplace. So we followed the market down on those. What we do think has happened is that what's called the lag time between the drop in oil prices and the drop in commodity prices has not yet filtered through. And that's why a lot of the retailers are putting pressure on the supplier base to say, when's it coming through? Now, our suppliers are saying to us the inflation should start to come down from about March, April. And certainly that's the indication we have. So all of us have done good work on bringing our core prices down, including our vendors, our suppliers. But the real cycling of the inflation against last year will start to happen from April, and we expect to see food inflation dropping from April.
So we're in this difficult environment where, as you just rightly said, growing the volumes has been difficult. So where are the next growth legs going to come from for Woolies?
The next growth legs from Woolies always come from the same source. High quality, lots of good innovation, and great value for money. And in a tough economic environment, we just have to do those better. So we've sorted out our opening price points. I think we've done that work. I've talked to you just now about the innovation and the quality that we've got. There's much more of that to come. We've got a wonderful program of promotions. We've got a wonderful program of new products coming in. And we're always working on freshness and high quality. That's what Woolies about. There's no shift in that. And in fact, we think this market is an opportunity for us to push our quality standards even higher.
One of the new things that you brought in the last year that we saw is Country Road in South Africa. Country Road on itself in Australia doing extremely well. Just what they changed in Australia that has now suddenly gotten them to earn more than they were before?
What we've done with Country Road is with the growing volumes, we've been able to leverage our prices down. So we've dropped, in Australian terms, Country Road prices by about 40% over the last 3 or 4 years. That's a huge shift in price. What we've done at the same time, because as the volumes have grown, is up the styling and up the quality. So what you've got is a beautiful range of what used to be highly expensive, is now good value for money, beautifully styled product. We launched it in South Africa a few months ago. It's been extremely successful, and we expect it to continue to be extremely successful. But again, we're standing in Country Road here. Even within Country Road, the fast sellers are the core building blocks of their range.
There's been no lingering resentment about Aussies and buying Aussies.
Well, we've beaten them at rugby, we're going to beat them at cricket. We have no resentment at all.
Let's talk about the outlook for the South African consumer. As you have rightly said, it's a tough economic environment, but we are seeing interest rates coming down, and some people are projecting perhaps a turnaround in the second half of 2009. Do you see any of that on the horizon?
I think our customers have got a lot to build back up. So they have been hit very hard in the last 18 months with high interest rates, with declining asset values, and I think it's going to take a little bit longer than 6 months for this economy to turn. Do I think the South African economy is resilient, and do I think it's got long-term legs? Absolutely. And we see, particularly as we head in towards 2010, this economy from a consumer point of view, if we can hold the interest rates low and stabilize jobs, which I think might well happen here, we'll see the consumer growth start again.
Many companies have been reluctant to give forecasts beyond. I remember one company that we covered wouldn't give anything beyond 3 months. Are you able to give us an idea of what earnings might be like in the second half?
We don't give forecasts, and I'd love to be able to forecast beyond 3 months. It's a very difficult market to forecast in. So what you have to do is run your business tight, buy the goods that you think your customers are going to want from you, and that's about quality and value and innovation, and offer it to them in the best way, and if it's right, they'll buy it. But it will be tough for some time to come.
Are acquisitions out of the question in this environment?
No, not out of the question. We've got a nice, strong balance sheet, but we're not the kind of business that rushes around looking for acquisitions. If something that's right comes along, as did Country Road a few years ago, we will pick it up.
Shoprite has done extremely well in Africa, and everybody has been lauding Whitey Basson for having had the foresight in the first place to step out in Africa when everyone was saying South Africa is great, we're staying here. Are you staying here for good? Are you looking beyond South Africa's borders?
We have a good business in Africa. So like Shoprite, we have a good business in Africa. We're particularly strong in some of the neighboring countries, Botswana, Namibia, but we have a strong business in Kenya. We're looking at other countries. We're expanding our business in Tanzania. So we have businesses right throughout Africa, and we do think that's a growth area for us.